How will the 2020 election influence this year's housing market? Let's talk about that and more in this week's segment of Market Watch. Hi there, this is Joshua Barks with Keller Williams Realty Boise and the Barks & Co. Real Estate team. Thank you so much for tuning in to this week's segment of Market Watch. And whether you're ready for it or not, it's an election year. The 2020 presidential election is right around the corner, and this year has been wrought with uncertainty. So I want to answer the big question on everybody's mind: how will the 2020 presidential election affect the housing market? In addition to that, we're going to talk about what happened the month of September in 2020 because the market dynamics are out, and so we're going to go into our deep dive with those. So take a look. Starting with the September 2020 market dynamics, let's talk about what's happening out there in the resale existing home side. So first off, this is what's going on as of the 4th of October. We have the lowest inventory that we've ever seen, including those winter months where we are typically slower, with 273 homes available on the market. Overall, what I want to show you is the difference that you see in this top graph, the market trends, compared to what we see in a normal year. So this is what we saw last year, which I would consider a normal year for our market, especially for the last 5 years or so. And as you can see in the market trends chart, we typically see inventory levels, which is this red line, come to kind of an increase while demand tapers off a little bit in those late summer months, getting into fall as people settle down and try to get everything situated for the holidays. So back to what we're seeing in this year, so September of 2020, let's start with that market trends chart like I mentioned. So last year we had 898 available homes on the market in all of Ada County, and this year we have 273. So we had 877 that sold in the month of September, whereas last year we had 698. So we have fewer homes that are available and on the market, but that demand with 893 pending versus the 785 pending, demand and the actual number of closed sales is up significantly from what we saw this time last year, and significantly from what we see during a normal year, let alone an election year. So what we're seeing is if inventory continues to decline, yes, we'll likely see fewer sales because there's fewer homes available, but demand is there, and that's the important part. My prediction that we would end 2020 with about 10% appreciation apparently was a little short, because we're at 10.7%, for the overall increase in the average sales price for Ada County. So we are actually the new average sales price for all of Ada County on the existing home site, so this doesn't count new construction, at $401,261. The first time ever that it's been over $400,000, and that is a 2% increase from what we saw just in the last month. So last month I said we were right on track for that 10% by the end of the year, and we've actually surpassed that 10% mark as of September. So the end of September, this is what we're looking at. Last year we had an 11.5% increase, so it's possible that we're going to see this closer to the 12, maybe even 13 range by the end of the year, depending on what happens week over week. If that inventory doesn't come up and demand stays the same, we are likely going to continue to see that rapid increase in prices, which means every month that you're waiting to make a move, if you're on the buyer side, is costing you. So let's talk about the breakdown on all the price points, because that's where the meat of this is. We have 23 average days on market for all homes in all price points in Ada County, which is down from 24 days last month, and then we had 25 days the months before that. So that's staying fairly consistent, but getting shorter on the average overall. A lot of that has to do with our upper end price points. Those homes tend to sit a little bit longer, but not by much, because if you come into this column, the months of inventory, so your absorption rate, we are in a very strong seller's market all the way through a million plus. So what the national economists say is a seller's market is anything less than 4 months supply, and anything between 4 and 6 is considered balanced. Anything beyond 6 months is considered a buyer's market. So what that means is, how many months would it take to completely sell out of the available homes in each price point if demand stayed the same and no new homes came on? So we're at less than 1 month for all price points up to $600,000. And then we are exactly 1 month at $600,000 to $800,000. And then still below 2 months all the way up to that $1 million price point. So that is incredible and very indicative of what's going on out there with demand. Homes are seeing multiple offers across all price points because that demand is there. So overall, we have an average month's supply of less than half a month at 0.4. And if you're looking down here, this is what I like to see as kind of an indicator on what's happening. We have the asking price, the average asking price for all the homes that are active at $587. The average pending home price is $467, and then the average sold price, as we know, is that $401. So what I like to look at this as, here's what sellers are hoping for, here's what buyers are agreeing to, and here's what we're actually selling for. So there's still a significant gap between what we are being asked and what we are actually selling for. As you know, pending prices aren't always the exact offer price. Oftentimes, those are just the homes that went pending. That was the price, the average sales price for what they were actually asking. Because you can see the bulk of sales are still between $250,000 and $500,000 in Ada County. So we had nearly 6,000 sales in the last 12 months in those price points. So it's an incredible time if you're a seller. For interest rates, according to the national markets and what we're seeing in Freddie Mac's market research study, interest rates are still propping up that demand as well. They've remained very flat over the last month or so, and we are right now, as of yesterday, at 2.87 for the 30-year fixed, which is barely down from what we had last week, so hence being flat. And with the year-long slide in interest rates, that seems to be ending as rates have flattened over really the last month. We've been hanging at that 2.9 number, and the national economy has been rebounding slower than what we were seeing early on in the summer. So with the record low rates and buyer demand, we are still seeing that remaining very robust through most of the nation, because this is the national numbers that we're talking about here with the national averages, especially with the first-time home buyer market. So we have a lot of first-timers entering into the marketplace nationally, and really the demand is the highest in the most affordable sections of the country. So specifically the Midwest. And if you look at prices in the Midwest, we've actually seen the home prices are accelerating at higher rates, or the highest rates in over 2 decades. So those affordable sections where everyone's fleeing the higher priced markets to go to the lower priced markets, especially those first timers as well. And we're seeing a lot of that this year. So mortgage rates remaining fairly steady. We are not likely to see them decrease significantly anytime soon. In fact, Freddie Mac and the Fed have indicated that interest rates are going to remain about where they are now until they start seeing the economy continue to rebound before they come up again. But when they come up, if prices are continuing to appreciate at the rate that they are, you are losing purchasing power. And then the amount of home that you can afford by waiting, again, may cost you. So if you're a buyer looking at the market right now, if you have, if you're not worried about your job and you are interested in making a home purchase, it's still a great time because you want to get in before prices continue to increase to a point where maybe you're priced out of the area that you want to be in. Because if interest rates increase and home prices continue to increase, that can make what was affordable a couple months ago no longer feel that way, because you'll be paying more both monthly and in the overall home price just by waiting. So the biggest thing that I wanted to talk about during this video is election years versus non-election years, because everyone's asking, what is the 2020 presidential election going to do? How is that going to affect real estate and the housing market? And whether we're ready for it or not, that election is right around the corner. And so if this year hasn't brought enough uncertainty, the election could be causing some people to stand by the sidelines, which I wanted to share with you is perfectly normal. So historically speaking, home sales typically slow down in the fall following the spring and summer rush. And a firm, the BTIG home building firm, they're a research and analysis company looking at home sales. They looked at everything from 1963 all the way to 2019. So they didn't look at this year because, of course, this year hasn't been completed yet. So the stats aren't out on what's happened overall. And they noted the average decline in non-presidential election years from home sales from October to November was 9.8%. So we had, we'll say, almost 10% fewer home sales in November than we did in October during a normal non-presidential election year. Then during presidential election years, that decline in the number of sales was down 15%. So a little over 5% more, or I guess I should say a little over 5% fewer homes sold in the month of November versus October on presidential election years. And a lot of that has to do with just uncertainty. And what's happening is buyers and sellers, they're just more cautious. They see the presidential election and they go, okay, well, I don't know what's going to happen with that. And they just pause. So usually what we see during those election years is that ultimately, while we have fewer home sales because some people decide that they want to go on the sidelines, the caution, it usually is temporary and ultimately results in deferred sales. So the people that were going to buy but decided to wait because of the presidential election, as long as the economy, jobs, and interest rates all remain robust and very strong, we see that defer later. So whether it happens during the holidays, which is unlikely, most of the time people defer from buying or selling in the fall to the following spring. So we have the presidential election results in just a few months that follow that. That's when we start seeing an uptick. So considering the current state of real estate across the country, specifically here locally too, we can anticipate that a slowdown may occur. And specifically, if we aren't getting enough inventory here locally, we're likely going to see fewer sales. But those effects will likely be temporary. So home sales have remained strong throughout the last couple of winters and have had a competitive nature with today's market climate. And so that really suggests that that's what we're going to be seeing more of for this winter is with those. Part of this report that I wanted to share with you, just an excerpt of it, is the year after the presidential election is typically the best of the 4-year cycle. So this suggests that demand to new housing is not lost during that election. it's rather pushed out to the following year. So that's essentially what I was saying with folks. If they decide to go on the sidelines in the fall, they pick back up in the spring, right after everything settles. So if you're thinking about, when is the best time to buy or sell, specifically regarding the election, if the election isn't going to affect your job and maybe you don't have finances tied up directly to the stock market, it could be a good time to buy or sell, because everything else aside, those are going to be the big variables. What's happening in the stock market with the election, and then what's going to go on with your job. So depending on where you are in that, if you have a good enough reason to move and you can afford it, it could be a great time, specifically because home prices are projected to continue to appreciate at a very steady and rapid pace. And it's a great time to cash out on that equity, because if you bought with a nearly, 10% increase so far this year, 10.7%, with that percent increase, what we're seeing is, if you bought a house last year, on average, you have 10% more equity, is basically what you can attribute that to. Now, those are going to give you very rough numbers, because it'll depend, of course, on your specific house, the condition, your neighborhood, the neighborhood around you, etc. But on average, 10% increase over the year is great. And by increasing 2%, just in the last month, from August to September, that goes to show, especially if you're in that first time home buyer category and you're in that lower price point. So say you're at like 250,000, right? 2% increase means a house that you were looking at and wanted to buy for $250,000 now costs on average $5,000 more. So now it's $255,000. And we aren't going to see that slow down anytime soon, specifically in those lower and first-time home buyer price points, because we have investors snatching them up, as well as the first-timers entering the marketplace, because it's never been a better time to borrow money. Interest rates are so cheap. So if you have any questions, explain if there's anything that we can explain further, or just answer to help educate you on real estate, whether it's the market or the process of buying a house or the process of selling a house, anything real estate related, that's what we're here for. So please contact us, comment on the video, give me a call, send me an email. There is always ways to get those answers. That is what we're here for. We want to be that resource. Okay, so there you have it. That's what's happening in the real estate market and what we normally see for election years. If there are any questions that you have, like I said, please feel free to reach out. My number is 208-914-1095, and we will see you next week for a regular segment of Market Watch.